This is a podcast by the Business Times, presented by DBS.
Today, we're here to talk about the R word. Nope, I'm not talking about retrenchment, but retirement. It's something that we all reach eventually, and something that most of us perhaps should be paying more attention to. There is a real risk of not having enough savings during our golden years. And as we all know, the cost of living in Singapore is rather high, and will only get higher in the years to come. So, how can we prepare ourselves for retirement? To help us answer this question, I have with me today Adrian Low, DBS's digiPortfolio Product Manager. This is Tech in Finance. Adrian, welcome to the podcast.
Nice to be here.
Okay, so let's get down to it. Considering that 1 in 4 Singaporeans will be 65 or older by 2030, how important is retirement planning?
So in other words, that shows that Singapore has an aging population, right? And this is something that we think it is important to start planning for early, given that the risk of outliving your retirement nest egg, right, is going to be actually quite high. So today, as we know, over the past few years, there's been higher cost of living, there's been a growing inflation rate. We think that these would be factors that will compound to the deficit that might come up over the next few years as more and more people start to reach their retirement years. So based off the findings from a DBS Financial Health Report published in July 2023, we find that baby boomers especially are more at risk of outliving their savings compared to other demographics. This is because the finding shows that the age group is spending a lot faster than they're earning, with expenses outpacing their incomes, right? So I think the key point for us, right, is that if people do not start to plan, ultimately, you may face a situation where you might need to compromise your retirement lifestyle. So some examples we have heard of would be like working beyond the regular retirement age, or even maybe finding a place where the cost of living is cheaper so that you can live longer at the lifestyle that you want. I think here at DBS, the most important thing to us, right, is that we want to help clients or customers realize that despite higher life expectancies, their ideal retirement lifestyle is one that can be achieved. What's important is finding the balance in terms of the trade-off between your near-term goals and your retirement plans. One does not need to overstretch. Instead, maybe start small with regular steps in the right direction. So this is just part and parcel of the broader holistic financial planning framework that we have in DBS, where we try to get Singaporeans to save, invest, insure, and retire well.
So what steps would you recommend for people who haven't even started thinking about this?
Right. That's an interesting question because as a parent of 3 young children, I know that Singapore can be a stressful place for adults. We often find ourselves having a host of responsibilities while feeling a squeeze of rising cost of living. So in fact, these are actually some of the reasons why some Singaporeans actually put off retirement planning today, or in some cases, right, for many, many years, to deal with the near-term challenges. However, compared to the earlier generations, we know that Singaporeans are going to live longer and more likely to spend more time in retirement. So on that basis, leaving your savings idle in a bank account, right, might not be a worthy retirement plan. I mean, here at DBS, we want to ensure that you don't just start, you start right? So before getting started, remember to take into consideration your financial obligations like your mortgage, children's education. Set yourself a desired retirement age and have a view of the ideal retirement lifestyle you want to lead. So once you're done that, right, you're able to better project how much you actually need in retirement. This is something that we have also integrated in our retirement tool on the Plan tab within DBS DigiBank. This tool can be used to evaluate how much you need to set aside for each month for retirement based on your current income and whether you're on track to reach your desired retirement lifestyle. We know that everyone's retirement plan or goal is unique and should comprise of a mix of different solutions across savings, government schemes, insurance, and investment. Start by building multiple passive income streams through CPF Life, SRS, endowments, annuity, and include investments to capture that kind of forward-looking growth, right, that investments can provide. I think an additional consideration for those investing for retirement would be to consider adjusting your portfolio mix according to your changing life stages. For example, playing it too safe when you're young could mean that you're losing out on growth for your retirement nest egg. Right? Markets do not move in straight lines, as we know. But the longer runway from your early days, right, allow your investments to weather through these ups and downs. On the flip side, taking too much risk close to retirement could also jeopardize your nest egg. What if a market event happens a year from retirement? That could potentially deplete your retirement savings by quite a bit. So this is how our new retirement digiPortfolio can help. It utilizes what is known as a glide path strategy, where your portfolio mix shifts according to your retirement time horizon. This ensures that younger investors don't have too conservative an approach, missing out on potential market returns. While on the flip side, right, you have clients who are a bit closer to retirement who have a more measured portfolio.
Could you elaborate more on DBS's Retirement DigiPortfolio?
Sure. Retirement DigiPortfolio is Asia's first global portfolio that not only automatically calibrates its asset allocation, taking into account one's life stage and retirement timelines, but also allows investors to draw down on their investments in a systematic manner. They can also see how these payouts contribute towards one's broader retirement plan, including CPF savings, your own savings, as well as traditional annuity and endowment plans. Right? So it is a collaboration between DBS and JP Morgan Asset Management, bringing together the investment and retirement planning expertise of both financial institutions. It helps you take away the guesswork out of investing for your future and automatically adjust your investment mix based on your age and retirement timelines. When you're further out from retirement, it focuses on building wealth. As you approach closer to retirement, it shifts towards a more stable asset mix, right, to manage risks. So I think the key is that even after you retire, our team continues to manage your investments for you, making it easier for you to enjoy retirement to its fullest. All it takes is 1,000 Singapore dollars to start with no lock-in periods. That means you can start easy, dollar cost average at your own pace, and withdraw anytime without any penalties whenever you need access to your funds. I think the best part is that you no longer need to invest on your own or monitor your investments frequently. When you invest in Retirement DigiPortfolio, you delegate this task to a dedicated team of professional managers who stay on the pulse of market developments and conduct periodic rebalancing exercises with no cost.
How is DBS's Retirement DigiPortfolio different from all the other robo-advisory offerings out there?
A good question. Most managed portfolios in Singapore determine asset allocation mixes, right, based on current market conditions as well as investment views. So some use algorithms to drive these decisions as well. I think what sets us apart, right, is that Retirement DigiPortfolio takes this one step further by incorporating your runway or years to retirement into determining the appropriate asset mix for your portfolio. So once you invest every year on your birthday, your portfolio automatically de-risks a notch all the way until you hit your retirement age. This ensures that investors take risks appropriate to their life stages, i.e., they're not too conservative or too aggressive, which may conflict with the life stage that they're in. I think the outcome of this, right, could be that not only do you not maximize or optimize your investment returns, but you could potentially jeopardize your retirement nest egg as well.
So is it possible to adjust the risk? Let's say, I want higher risk or lower risk. Is it possible to override it or?
Actually, you can't override it to a sense that you can't say like you want 80-20. So by default, based on your age, there's a model in place to help you glide. The pace of glide would be quite consistent for everybody, which is gradual, but taking more risks, I would imagine would be like a satellite portfolio to add on.
Still to come, should you be investing in this, and are Singaporeans adequately prepared for retirement?
This episode of Tech in Finance is presented by DBS. And now back to the podcast.
Welcome back to Tech in Finance. We've been speaking with Adrian Low from DBS. Adrian, earlier we talked about DBS's Retirement DigiPortfolio. So who exactly should be investing in this?
That's an interesting question. Of course, our view is that anyone who is looking to invest for the long term or retirement should definitely consider this. But I think more importantly, anyone who is not sure of how to start retirement planning or when to start retirement planning should consider this solution. Other than leaving the heavy lifting to the investment professionals, features like recurring top-ups allow investors the confidence to dollar cost average from just 100 Sing dollars. We particularly urge those in their 30s or 40s to leverage their advantage of a longer investment horizon to start investing early, as there are more years to grow and compound wealth even with smaller but regular investments. On the flip side, you might think that this isn't appropriate for older investors, but this is not the case. With people living longer, we encourage the older investors to continue retirement planning in a disciplined manner, growing your money and building your nest eggs diligently. As mentioned, the beauty of the Retirement DigiPortfolio is that the portfolio would remain actively managed through your retirement years.
Adrian, what does your dream retirement look like, and what are some of the steps you're taking to get there?
Right, sure. As with many of my peers, financial freedom is the main goal. and if possible, a fully paid up mortgage way ahead of retirement. This will allow for some flexibility financially to pursue other interests such as traveling the world with the family, but also simple ones like coffee catch up with my friends. So the plan to achieve this has three main components: a savings component through CPF Life, investing regularly for the long term through dollar cost averaging, and also protection for unforeseeable health events. For CPF Life to me is the foundation of any Singaporean's retirement plans. With lifelong guaranteed payouts from age 65, my objective is to strive towards meeting the BRS or even the ERS if finances allow. To aid in this goal, I set aside a portion of my bonus each year to voluntarily top up the CPF SA, which of course earns 4% per annum, and interest continues to compound year after year. What I set aside each year will of course vary depending on any upcoming expenses. For investing, history shows that investing is necessary to outpace inflation or the cost of living. Investing well over the long term should even better a 4% per annum rate of return. My investment journey so far, though, has taught me that it's never about trying to time the market, as for every low, there might be a lower low coming, or for every high, a higher one. Instead, it's simply about starting early, focusing on forming the habit of investing consistently with what you can afford to invest rather than holding off for the right time to put all your savings in. My long-term investments, retirement DigiPortfolio included, are all on bite-sized regular savings plans, which also allows me to feel more confident to not have to monitor it all the time. For protection, unforeseen healthcare costs are definitely my biggest worry. I was insured when I was much younger and reaping the benefits of a lower premium now. I take the same approach with my family, especially my kids.
Well, that certainly sounds like something we should all be working towards. Hopefully, after listening to this episode, you've also been inspired to start planning for your retirement. Adrian, thank you for your time.
Thank you so much.
We've been speaking to Adrian Low, DBS's DigiPortfolio Product Manager. I'm Kim Siang for the Business Times. Join us next time for more Tech and Finance.
This episode of Tech in Finance podcast was presented by DBS. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice. This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts.